So welcome to this problem. So to this problem, we'll be dealing with the shutdown decision. So in shutdown decision, we are going to decide about which department to shut down, okay, and what would be its implication on the overall profit. So we'll start from this question. So the question asks, restate the financial position in terms of the contribution made by each department, and based on these figures, make a general recommendation. Discuss any other factor that should be considered before a final decision is made. Okay, so they're asking us to take a decision and we have to compute the contribution. So let's see what decision we have to make. The management of Ionaco is considering the closure of one of its operations, Department 3, and the financial accountant has submitted the following report. So there is sales unit, sales, direct material, labor, production overheads, gross profit, expenses, and net profit. So thereafter he has additional information. You can read it along the cursor. So the first one is production overheads. So production overheads is assigned to each of the department in terms of sales volume. So how it is to be assigned, that is not given. So we have to still read it. Okay. So also the expenses, this number is the head office overheads, and that is also assigned on the terms of sales volume. So as a management accountant, you have found out how these expenses are really incurred. So 50% of the production overheads can be directly traced to the departments, okay, and they have to be allocated on 2:1 ratio. Similarly, expenses can be allocated in 3:3:2 ratio, and the remainder of it is a general fixed cost, okay. And he also says 80% of the direct labor is fixed and cannot be readily allocated. So you can't, even though that is direct labor, that 80% of it is cannot be allocated. So the remaining 20% is variable and can be better allocated on the basis of sales volume. Okay, so so the total of this number 63,000, 80% of it is fixed and cannot be allocated. Okay, readily allocated means you cannot divide it on any department basis. So it is a general fixed cost. The balance 20% we can allocate it on the basis of sales volume. Okay, so this is a very small sum only, but we have to be careful how to split the costs. So we'll start from particulars. So we have departments 1, 2, and 3, and total amount. So first we have sales. So the format should be sales. Then we have to less the variable cost. And then we have to less. Okay, so once you less the variable cost, you'll get the contribution. And thereafter you have to less specific fixed cost. And once you get it, you will get the profit. Okay, the balance of it, okay, the balance fixed cost, if you want, you can also put it as general fixed cost, which is not you can't allocate this general fixed cost on department basis, so you can allocate it on the total. Okay, so we'll start from the sales. So sales is 1,50,000, 2,40,000, 24,000. Then we have to less the variable costs. We have direct material, which is 75,000, 1,50,000 and 10,000. Then we have direct labor. So direct labor is, we have a note for it. So direct labor, he says 80% of it is fixed and cannot be allocated. So we'll have another direct labor here, and we'll have a working. The working is 63,000 is the total of direct material, so direct labor, and 80% of it is cannot be allocated. So we have to put it as a general one. The balance 20% that we can allocate. So we can allocate the balance. So what is the balance amount? So the balance amount is, we will work out it here. The balance amount is 20%. So 12,600 is the balance amount. This balance amount has to be split. So how do we split it? We split it on the basis of we have to see the basis. Can be split on the sales volume. Okay, sales volume is units. Based on units, we have to split this. So 12,300 into the total into 5,000 units for 5,000 units for 1 divided by 13,000 units. So rather than working like this, I think you can take it as a working note so that it would be much more neat. So we can put it here. 63,000. Out of this, the general fixed cost, we can do this working here itself. Okay, this is how we found it. Then the balance is this amount, right? I think now it becomes clear. So the balance is this, and this can be allocated on the basis of units. Okay, so when you do this in units, you can put it like this: direct labor cost per unit. Okay, you can find out that would be we can put it here, 12,600 divided by the total units, which is 13,000. So that amount would come to 0.96, right? See, this 0.96 could be calculated here. So we can directly go here and we can put those amounts. So the relevant amounts are, so we can easily multiply the per unit. So if you want, we can put this also here. Okay, direct labor cost, which is variable. So number of units here is 6,000. Okay, when you add this, you will get the total amount 12,600. So that comes to 12,600. So we have done up to labor. So labor is over. The next expense that we have is production overheads. He says production overheads, 50% of it can be traced to departments. So could be allocated on the basis of 2:1. So it is like similar to this. It is like similar to this. So we can work out production overheads again. So production overhead also has general fixed overheads, okay, which is 50% of the cost. So totally we have how much production overheads? We have 15,000. So 15,000. General fixed overheads is half of it. So it is half. Okay, so that comes to 7,500. The balance would be, okay, so the balance is 7,500. So what is the, how is this amount split? The amount is split on a simple ratio of 2:1. So production overheads, the variable part of it is split in the ratio of 2:1. So what we have to do is we have to so this alone is 1. Okay, so now you can copy this and you can directly paste on this. Okay, so that's done. So the next one would be the balance. So the balance, he says, can be and so could be allocated on this basis. So the balance, they are not telling what to do, so we don't need to worry about that. And he says similarly 60% of the expenses can be allocated in the ratio of 3:2, with the remainder not being possible to allocate. Okay, so again we have to work out a table like this. So let's get the expense amount. The expense amount total is 40,000. So take it here. And out of this 40,000, 60% is fixed. Sorry, 60% can be allocated. So 40% is what we want. 40% is what we want. So 40% is fixed. So 60% is the balance amount. This can be split on the ratio of 3:3:2. Say 3:3:2. So the 24,000 multiplied by 3 divided by the addition of all these numbers, 3 plus 3 plus 2, so that is 8. So again here, so for this it would be, so you can copy all these numbers and you can directly go above. So it should be placed here. So the question asks you only the contribution part. So we don't need to find out the other numbers. We can just find out the contribution. So to find out the contribution, it would be sales minus sum of all these numbers. Okay. So what is our consideration? They asked whether to close department number 3. Okay, that was the concept. Should we close department number 3? So department number 3 is net profit was 24, sorry, net loss was 2463. But if you see here, it is giving you a contribution of 4562. Okay, and there is no relevant fixed cost. So there is no fixed cost for this particular department. There is no fixed cost. All the fixed costs are head office costs, okay, or general fixed cost. So you can write a suggestion like this. Okay, suggestion, as there is no specific fixed cost and also department 3 has a positive contribution, okay, we can operate the department rather than closing it. Okay, so that can be the answer here. Okay, so always the suggestion is very important. So I don't think you need total, but it would be great if you put the working note numbers somewhere. So working note number 1 was this, working note number 2 was this, and 3 was this. Always, if possible, reference it. Okay, let's see any other additional element they are asking. Discuss any other factor that should be considered before a final decision. Okay, so any other factor that we have to consider, if you want, like, we can take some factors. So we don't need to put it here. We can put the factors here. So factors to be considered before closure of department 3. Okay, so even though we are not going to close it, okay, in case we are going to close it, we have to give some we have to consider certain points. We'll just consider 3 points. One, there can be a relationship between department 1, 2, okay, 1, 2 and 3. Okay, that we have to consider. Okay, there can be a relationship in terms of cost, okay, between 1 to 3 in terms of cost or cost sharing or appropriation. Okay, so there can be some common costs, okay, which can be shared by 3 departments. If we cut off one department, it has to be shared only by 2 departments. So it is better to have one more department. So provided it is still making a good contribution, we don't need to much worry about it. Okay, so the second concept is okay, employee motivation level should be considered as closure of a department impacts employees negatively. Okay, it impacts them negatively. And the last one is the other point, if you want, we can consider. Okay, okay, I think 2 points are enough. Okay, we could consider with just 2 points and move, because the question is not asking any other extra point. So let's check whether our answer is correct. Answer is the department is making a 4561 as a contribution. So if we got 4562, I think that would be the rounding of mistake somewhere. So that's about this problem. Okay, so hope you guys got a good understanding about this problem. So workings, it's not that you have to do it in this format. You can do it any format. In paper, it would be a much more easier way to do the format, these working notes. As I am doing in Excel, I am doing it in this manner. You could do it in a different manner. Okay, so that's about here for marginal costing. We'll move on to the next chapter.